Okay, module 2, video 6, the Spartan trading setup rules. So before you trade, you need a trading setup, right? You cannot just jump in because you see a good trend line break, or you see a major horizontal support line break or bounce or whatever. You need setups, trading setups. These are part of your rules in order to spot a trade and also manage it later on. Video 6, the Spartan trading setup rules. In order to find a setup, you need to do your top-down approach and you need to draw your trend lines, of course. And we will do that right now. A historical example on GBP Aussie. I just chose one pair. It doesn't really matter. It's a little bit, it's not that easy, I would say, compared to a very trending pair right now. If you check out this weekly chart, what do you see? All in all, yes, it's a down move. Of course, the price still creates lower highs on the chart, and also recently lower lows in the lower high. But all in all, you see it's a little bit ranging here. It's of course a big range, and the price still moves lower, but it's not compared to for instance the euro yen, where the price just broke resistance and moved up for weeks and weeks. Okay, so downtrend on the weekly chart, the price still creates lower lows and lower highs, but we need to found ourselves our horizontal support and resistance. What I'll do again, horizontal line here, I click on the box up here and I find my horizontal resistance over the price, close over the price. So I take it from here. That's where we are right now. And of course right now in this area we already found ourselves a lot of resistance and previous support, but I need something a little bit away from the price right now. So if I move a little bit higher to up here, I find some touches here, and but there's nothing really pointing out, so I go a little bit higher, and up here I see some peaks. Look at that. And here a little bit of resistance before it breaks. I also see something pointing out here and here. So we don't put our resistance line, horizontal resistance lines, at the top of a peak or the middle of the body, but something in between. So I would say we leave it right here. That's the 1.56 area. We have touches here and here, a little bit here, there, and also here it moved a little bit away, but you get the point. Okay, so not the highest points, not the lowest here. That is not that easy compared to the previous example, because we have a lot of spikes in the range here. The next horizontal resistance, just to practice, would be where this is the next high, and if I look back, I have also touches here, and I have a lot of touches there, and a lot of touches here. That's enough. You don't have to scroll back on the chart forever. If you get your touches on the whatever 17 or 22 inch screen, you will have enough history to connect the lines and to draw, of course, your horizontal line like right now. Resistance there, and I'll do another one. This is the highest point here, and look, these are the highest points. Here are the Heikin-Ashi bodies. In between you see you have touches here and there. Tails, the price comes back, so it counts here and here, and a lot of touches, of course, up and down in this area. Good enough. 1, 2, 3, 4, 5 touches. You don't need these lines, all these lines right now. It's enough if you leave the latest resistance line, of course, because the price is still on this weekly chart over 400 pips away. So I just delete these lines and leave one only, the one that's closer to the actual price. Okay, what about support? You need support under your price, where the price is right now, below that, and of course you have, as I said, in this area already support, but let's go down, find a previous area, nice area. So look, you have a peak here, and then also touches here where the price bounces, and here it bounced again, and it almost touched here. So this area between the lowest point and the body in the middle, that's where we leave the line. It's also round number 1.50. Fair enough. Of course you will find others if you just move lower. Look at that, touches here, touches there. Here it broke a little bit, but then it came up. So also a very good support area, and later on, of course, the lowest points of your chart. But we don't need that right now. It's too far from the actual price, and forget about that right now. So that's your weekly chart. What's the next step? You already don't forget to draw a trend line if you like to, with your 3 touches. Even on the weekly chart you can do that. You don't have to, but you can. Here it makes sense, because look at that. If I start from here, 0.1, 0.2, 0.3, 3 touches, I extend the line, and look what happens. The price is really getting close to that line. Yeah, remember, you don't start exactly on the highest point, not on the body or the peak, but something in between, and then the price, you see, is really close to that line, and this line is holding for a long time. You have your 3 touches now, almost the 4th. That makes that resistance line very, very powerful and strong. Also, you have again your crossover to the downside. In a trend, it's a really powerful tool. In a range, a crossover doesn't mean much. You can see, look here, crossover, 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 crossover. It doesn't mean much, but okay, that's not for this video. Just because you're watching right now, something to think about. We will cover that later on in a different module. A crossover, the latest crossover, the price moved down, it retraced a little bit, it created a lower high and a lower low. This low here is lower than the previous one. Also the price created a lower low afterwards, so this low is lower than this and this low. We have a new low on that weekly chart, and then the price retraced a lot, and it's close to resistance. Okay, what do? We switch to our daily chart. Now we want to find ourselves a setup. We won't find a live setup, so we use a setup back in history on that chart to demonstrate how a setup looks. And now you have your resistance line, you have your horizontal resistance area also. Down here where you see your first green candle, you assume that the price will retrace at least back to the 36. We are always waiting for retracements back to the 36. It's maybe a downtrend on the weekly chart, but if the price moves far away from your 36 EMA, you assume that it will retrace back to it. And if I measure it and I see like over 700 pips, and I see my first green candles down here, that means that on lower time frames this retracement is also a small trend, right? So we just imagine that you see that first green candle or the second, whatever, after all these red candles, and you switch from there to your daily chart. Just ignore all the others, or at least the last two ones here. Daily chart, and then on the daily chart, what do you see? let me delete now your horizontal lines for this example. You don't need that. You leave your trend line there, that's okay. And on the daily chart, what do? You have to draw your trend lines again, right? Choose your trend line and find yourself your 3 touches. Touch 1, touch 2, touch 3, and there we go. What do you see here? The price is bouncing. We have your crossover, the crossover to the downside. It creates lower highs, lower lows, retracements here, bounces on the 200 EMA. The price creates a new low again, another low, lower highs again, lower lows, a range, and then you have a bottom formation, many touches down here, 1, 2, 3 touches, and then you see your first higher high. So that high is higher than the previous highs down here. The price retraces like always, and the price creates a higher low. Yeah, remember, the price never ever moves in one straight line. It always retraces. Sometimes, depending on the time frames you're looking at, not much, but when you switch then to lower time frames, you will see that the price always creates higher highs, higher lows, or lower lows and lower highs, depending on the direction of the trend. So here we go. Bottom formation, the lowest parts in the downtrend. The price breaks the 36 EMA, your guide, your trend guide, and then it retraces back to the 36. It also moves under the 36 again, but it doesn't matter that much. We still have that trend line here. That is our important part, and the price needs to break that line first for us to be sure that the short trend is over and we could consider a new trend on these time frames. Okay, we know where our major resistance is coming from the weekly chart. This is our trend line, and this is the trend line on the daily chart. And if the price breaks this area on lower time frames, we can look for short or long entries. Of course, for long entries, right? The short trend is over. The price creates a higher high and a higher low. It breaks our 3 touches resistance line and closes over there. So the next step would be that we switch to our 4-hourly chart. But before we do that, just take a look at this setup here. What is that? Yeah, if you're new to that, that's what we call a 1, 2, 3 setup, or ABC setup. The markets and the price always create these 1, 2, 3s. You see, it creates these 1, 2, 3s when it's moving down, sometimes with retracements to the 12 EMA, sometimes it retraces to the 36. In this case, it's very powerful and it's moving down fast on this time frame, but always with retracements in between, never moving in one straight line. And after that range here, that means the price cannot create higher highs or higher lows. It's kind of stuck between 2 levels. It breaks out, creates a higher point, and then it comes back, but it does not find the lows again. It stops before it's finding the previous low. That is what we call here our higher low, after that higher high. So what you have here is point 1, the lowest point on the chart, point 2, the new high, and point 3, the higher low, for an uptrend setup. Because the price moves up, it's trying to break resistance. Now resistance breaks, and on the lower time frame you can start watching or looking out for setups. Now here's a crossover also, an indication for trend change in combination with a trend line break. You have your higher high and your higher low, so your 1, 2, 3, your A, B, C setup. And now you switch to your 4-hourly chart. I repeat myself many times, but only to make sure you understand everything. And look at that. This is your daily big 1, 2, 3 setup. And then you can see, let me delete that so it's not confusing you. I also delete the other ranging lines here. This is your daily trend line. Here again a crossover. The 12 is crossing the 36 to the upside. The price moves over the trend line, and at some point it retraces back to the 36 and moves higher. Okay, and you see the price creates always new higher highs and higher lows. So your trend here is long, and the 36 EMA is supporting the price all the way up. Trend line break. Here is your crossover and a touch on the 36, so you find yourself a low point. It doesn't matter where exactly, but it has to be, usually it's under your trend line, close to the crossover, a little bit before the crossover, it doesn't matter. Then the new high you find, and then the retracement, the first retracement back to your 36 EMA. That would be this candle. Here it's not very easy to spot. You see that would be 0.1, 0.2, 0.3. We draw lines over all these candles to make sure we have a lot of touches there. And then let's draw another one. Retracement, right? That is your first retracement here, or here another one. It doesn't matter which you use, as long as it touches the 36. The price creates a small higher point, another retracement to the 36. These 1 to 3 setups are not that easy to spot, and that's why I use them in this example. Now things are getting easier. 0.1, 0.2, a clear move up. You see the Heikin-Ashi candles have nice big bodies. That means buyers know what they are looking for. The price is moving up. Retracement back to the 36. You draw your line over these red candles and the candles that touch the 36. A clear break of that area again, and another 1, 2, 3. That means 0.1, touch or close to the 36. In this case it's touching the 36 by the pip, so a good example. Retracements back to the 36 EMA. You draw the line over the Heikin-Ashi candles, and you see another break, and the price moves higher. Again, the price moves up, retraces back to the 36 EMA. It's touching, it's bouncing, and it moves up again. Now you see it's reaching your weekly resistance line, and that's why it's so important to always do the top-down approach. You need to know where the price is likely to bounce again. Okay, but that's not for now. We are looking only for trading setups here, and we found ourselves a lot of setups after the trend line break. We are looking for 1, 2, 3 setups, starting from the weekly chart, like always, even the monthly as a small look if you like to. Weekly, then we go to our daily chart, draw our trend lines, and immediately after our trend line break we look for a setup. The closer the setup to your trend line break, the better for you, because that means you would look for a trade close to your trend line break, and that means also that you are in your possible new trend just from the beginning, and not somewhere up here where the chances are higher that the price bounces and retraces more, or again a trend will change. Yeah, you want to look for setups close to a trend line break or a trend change. Just please keep that in mind. I will say that in upcoming videos many times. Don't worry, I will also create more videos on that topic later on. But for right now, for the basics, that's what you're looking for. Trend line breaks, 1, 2, 3 setups. You need the price to move over your trend line, and if you don't get a setup, or if you don't see one or recognize one on the chart, you want to wait before you see a clear 1, 2, 3 setup. Just ignore the other EMAs right now. Just focus on the 36 EMA, 12 EMA crossover, trend line break, and then after the break, retracement back to the 36. In this case, because we are looking for a long 1, 2, 3, that means we want to buy. We need the lowest point, point 1, then point 2, the new high, and point 3, the retracement back to the 36 EMA if possible. Okay, ideally you want to retrace them back to the 36. Then you can also start drawing your support lines and say, okay, look, I have a few touches there. If I start connecting these and extend the line, look what happens. You can connect all these areas almost by the pip, and that's how you draw your line and identify a really strong support line. Yeah, the line under the price and under the 36 for long trends as support. Really easy to do if the trend is strong. Look at that crossover again, 1, 2, 3, 1, 2, 3 setup, 1, 2, 3, another one, 1, 2, 3, another one, 1, 2, 3, another one. So it's a really powerful, steady trend. And again, you see the price does not just explode and reaches resistance. It will retrace again, move up, retrace, move up a little bit, retrace. That's what markets do always, not always, but mostly, and on whatever a currency pair or whatever other market you trade, you will see that the markets always do these ABC or 1, 2, 3 setups, and that's why we like them so much, and that's why we are looking for these setups to trade. Okay, in this video I won't talk about the entries, that's the next module, and I won't talk about the time frame combinations. That means what time frames exactly do we combine to trade. I showed you in the module before, but in detail and how we do it, that is a different module. Right now you just want to know about the setups, how they look like, that we are looking for 1, 2, 3 setups after trend line breaks, and how to draw support and resistance lines in order to find these setups. Okay, so right now this module is this video is over. You know the basics of the 1, 2, 3 setup and how to find a setup after doing a top-down approach. I just used a daily 4-hourly combination for this example. I will catch up with you in video 7 on how to find a clear trading entry. Please watch this video 6 at least 2-3 times to make sure you understand the trading setup rules, and then watch this video, the next video, video 7. Okay, see you soon. Bye for now.